Well, of course, there is plenty domestic news to keep an eye on. The global markets also have been buzzing. And on one side, of course, it is about the US and China trade talks, which the markets are keeping an eye on. And on back of that, we have our latest data that shows that Canada has shipped record soybean to China in the month of Jan. The US soybean exports to China have declined quite sharply. And China seems to be buying from Canada and Brazil really to avoid the 25% US tariffs. And that number now clearly can be seen in case of the soybean imports. If you look at the Canadian exports to China, that has been at 1.23 million tons in Jan, which was just about 800,000 in the month of December. So you can clearly see the numbers tilting towards the other producers and exporters rather than US. Carlos Mirarzano of Rabobank now joins us live on the line to talk further on that. Carlos, hi, good to have you. Let's start with soybeans first. And while the prices continue to be very close to those multi-month highs, the 7-month highs in the global markets, the latest Canada export numbers to China does show that even as we are looking at US and China trade talks, Chinese are importing from other countries to ensure that they don't have to pay that tariff.
Yeah, hi, Manisha. Yeah, certainly the Chinese buying from the US has been a little bit disappointing, and it's a development situation. We will know much more next week and in the coming few days. But certainly they have been a little bit disappointing for the soybean market and the soybean price.
So what's your sense going forward? What kind of trade can we look at? Because clearly what is happening between US and China is impacting all asset classes, from equities to other commodities like metals, crude, etc. But many of these agro commodities also are watching out for this. How are you looking at trades, numbers and the macro picture?
Well, I mean, it's a very binary situation. You have,
All right, we've lost Carlos' line there, but we'll try and go back to him. As he said, there is a lot of jitteriness that we've seen into the prices. But in the meanwhile, the other exporters or producers really seem to be making hay, because China seems to be importing from other producers like Canada, Brazil at this point in time. And we have seen the prices go higher because of that as well. Because when you look at the Chinese imports itself, the number has been quite growing on a month-on-month basis. When you look between December to January, you are looking at those higher numbers. Carlos, if we have you back, what is your sense? When you look at the demand supply, of course, is one part of fundamentals, but the macro picture, do you think the markets are really driven by that right now?
Yeah, the markets are driven by the trade talks, especially grains and oilseeds, and that's the key component for grains and oilseeds. However, there are many other factors, especially for the softs. For example, we are looking at a much better weather in Brazil that has been very bearish for coffee, especially coffee Arabica, and sugar to a great extent. Now going forward, especially for sugar, we're expecting a little bit of price upside. We do see a lot of support coming from the ethanol market. We do believe, for example, that sugar prices will have to incentivize more cane being diverted to sugar in Brazil to avoid a large deficit globally. So we do see some price upside on certain commodities, despite all the trade talk pressure on grains and oilseeds.
Point taken. So what's your sense on sugar, since you mentioned that, as India is looking at a lower crop estimates now, as we've seen revisions continue to be on the lower side? Indian exports, I don't see that number really moving above 3.5. What's the scene in the global markets, and what are you reading in sense of prices going forward?
Yeah, of course, the situation in India is key to the market. However, I think we are a little bit limited by the amount of exports that we may see from India. I think the amounts you mentioned are spot on, 3.5 million tons. Next year, potentially a big drop because of the dry weather there. However, also the political situation, any policies from any future government will impact the market, will be a key factor driving the sugar market globally. But in the more immediate term, we have the start of the Brazil cane harvest in April, and I think by then we shall see prices trading a little bit closer to the ethanol parity. Now, the ethanol parity is at about 15 cents, and at the moment we are trading at 13 cents in the sugar market. I think that difference will have to adjust, and probably it's going to be ethanol prices coming down, but also sugar prices getting a little bit higher. We are forecasting 14 cents towards the middle of the year and the second half of 2019.
Okay. Carlos, since you track coffee very closely, what's your sense on that as well? Because we've seen the prices quite choppy there too.
In the ethanol market, well, certainly, and internationally in the energy market globally. It's hard to say, and I'm not an energy analyst, but I do believe that one thing for certain is that Brazil we cannot see Brazil diverting a maximum amount of gain towards ethanol next year. We really need sugar prices to incentivize a little bit more sugar production.
All right, Carlos, we'll let you go at that. Really appreciate you joining us. So that's a view really coming in that we might not be looking at the kind of surplus in sugar that we are doing right now, and that could be supportive for the prices going forward. We'll talk about the other international commodities as well, and Prathamesh Malya of Angel Commodities joins us for that. Prathamesh, hi. Crude oil prices has been a big talking point, 3% down in the overnight markets. What's your sense at these current levels?
Manisha, I think crude has been rallying with perspective that OPEC is really doing its needful with regards to the production cut. But then you really need to have a look at the flip side of coin, wherein U.S. production is rising, inventories are rising. I think these are the two factors which should possibly pull down oil prices in the near term. And I think crude might possibly correct almost $3 from here on in the international terms. And on the MCX, you will almost see crude prices going towards 3,950 mark. So I think selling at higher levels is a better strategy now. And the strategy would be around 3960, the entry point. Stop loss would be 402 and target towards 3830. So I think we are looking for correction in crude.
All right. And how are you looking at the base metal prices? Because while, of course, on one side, we have the deficit in supplies, the Chinese demand is expected to improve, and then the U.S. and China trade talks seem to be going well. Would you say there is more bullish news in the circles than bearish?
I think, Manisha, the hopes still remain that U.S. and China the trade tensions might ebb over a period of time, and because of this, all the metals have rallied in the past few trading sessions. I think buyers are possibly exhausting here, and you might see some bit of correction. But then the best pick I would do a trade for a trader, so I would sell copper at this level at around 463 mark. I think at the stop would be 467 and target lower towards 55.
All right. Those are the commodities those are the strategies rather for the industrial commodities for the near term. Prathamesh, thank you so much for joining us and helping us understand the price movement. But with that, it's a wrap up on this edition of Closing Bell. After the bell comes up next.